Hello, this is Peter Bell, and I'm here with Mr. Don Lay. Hello, Don.
Hi, Peter.
Wonderful to be talking with you. Medallion Resources is ticking away there as ever.
Yes, we've sort of had a workmanlike approach the last few years through the slow and bear market of the rare earth world. The There was as your listeners may remember, there was a sort of a bubble through 2010 through 2012 in the rare earth marketplace, and at one point there was probably, depending on how you count it, 300 or 350
Wow,
publicly traded juniors around the world that were out trying to do something in rare earths. And I'm happy to say we're one of the few left of 15 that are actually still in the business and moving forward. So
amazing.
it's been interesting, but I'm happy to say rare earths are coming back in favor due to really some interesting uh, you know secular dynamics in the industrial landscape. And
Wow,
so
this steady
good.
march of human progress to some degree.
Absolutely, yeah. So we're all used to sort of waves and commodity cycles, and we happen to be through a big one. But we find ourselves in a pretty interesting position right now in the
Yeah.
rare earth place.
Well, and great change coming to technological change that I think some of us cannot imagine. Uh, very uncertain future in a lot of ways.
Yeah, there is. I mean, I think that the one thing that's consistent is the 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 pace of change that we're now experiencing, uh, technologically especially. And there's some really interesting technologies rolling out that'll revolutionize how we do things and how we produce things
Yeah.
for the next 100 years. So it's a great time to be alive, frankly.
Well, and we're not the only people aware of these changes coming. Obviously, uh, just a month and a half ago, maybe by now, uh, the end of July, a report out from the UBS group, the same UBS group, I gather, who took apart the electric vehicle and counted all the little bits and pieces of advanced materials that were included. This same group, or some of the same people, have done an initiating coverage report on an Australian listed rare earth mining company called Linus Corporation. The title of Unearthing a Rare Cash Cow. They had a lot of fun in this report, full of important information and a very big signal that such a globally reputable research outfit and investment bank as UBS is having a look at little old Linus.
Yes, the I think the initial report you're referring to was one they did in 2017, where they tore apart the Chevy Bolt, which was the new electric vehicle at the time. And it was an interesting report because it was one of the few times they had used their entire analyst team from around the globe. So they had analysts weighing in from all the continents they operate in, four or five of them, and in effect looking at how the trend towards vehicle electrification was going to impact autos, auto parts, electronics, plastics, commodities, and all of the industries they covered on a global basis. And so it was a terrific report, and really kind of in my mind was a seminal piece of understanding for the EV market, especially as it related to us that track the commodity side of it. And one of the points they made in that report, Peter, was that NdPr, the two rare earths, neodymium and praseodymium, or abbreviated NdPr, were critical elements for increased use for electric vehicles, and third as a commodity, only next to lithium and cobalt. So that was really an interesting thing to see, that a big firm come up with that conclusion. And then this report here, just as it came out a couple of months ago, as you noted, really has come out and said they've gone out, and their Australian mining team has picked an issuer, Linus being the big rare earth production firm outside of China, and put a strong buy recommendation on it with a target of 330. And so they're definitely telling their clients that this is an area they need to pay attention to.
Yeah.
So it's quite exciting times for us that are in the rare space.
Well, and just looking, at the names, some people to follow there for years to come. Uh, Daniel Morgan, Glyn Lockock, and Jade Little, all analysts at Linus. I'm sure there's some other influential people involved in this report and whatever investment banking deals may come for Linus and others in the future.
Yes, well, it's an interesting because the analysts are certainly independent of the banking folks through their Chinese wall, but when they pick and choose what they're going to cover and recommend, they have to do it with wearing certain hats, and one of those being is the company's got to be big enough and liquid enough and have enough of an opportunity. That opportunity's got to be open for a period of time for our clients to participate in it. So that would have to be a few years. Their clients aren't day trading. They're big institutions looking to deploy capital over months or years. And there's got to be an opportunity for financing and M&A or other things for their firm. So they kind of look at it all through that lens in terms of where do I spend my time, because these are expensive analysts and they got to roll up their sleeves for a few months, do a lot of work, a lot of due diligence, a lot of number crunching and everything else to come up with a strong recommendation. Then once they release the report, that's not the end of the job. Then they've got to go out and market the report. So they've got their salespeople on equity desks in Singapore and Tokyo and New York and Zurich and London, talking to clients all over the world. And these analysts have to support those salespeople. So they got to do calls with portfolio managers that are all over the world who ask really tough questions. So they better have done their homework or they're going to be embarrassed. And there's nothing an analyst hates more than being embarrassed. So the fact that they've done all this work and come out with this conclusion really supports, kind of the investment thesis that I've been talking about for the last couple of years, in that the rare earth market is really about the magnet metals, and that's focused on NdPr. And of course, Linus is the flagship company in that sector.
Well, and shocking to see Linus with average daily trading volumes of 5 million shares as of that report, $12 million Australian value traded on average. I'm impressed by that. Yeah, per day, it's huge.
Yeah. So although from UBS clients, many of them, that's still would be considered a small cap company. So,
well, and the multiples too, price to book value not outrageous, and debt coverage looking good. You'd almost think, just looking at the financials quickly, that this was a healthy mining company. But the report here, one of the opening lines is, ramp up has been difficult, but that appears to largely be behind the company. Maybe an understatement there to some people who've bemoaned how long it's taken and all the setbacks and everything. But it's the reality, I think, of the mining industry. A lot of times is delay and cost overruns and challenges.
Yeah, no, that's very true. It's true in the mining industry, and in rare earths in particular have tricky metallurgy, tricky processing. So it often takes longer to get up to nameplate production. And there was a period of time when people questioned whether or not Linus would actually survive the downturn.
Yeah.
It's important to note that Molycorp, the big American rare earth company, didn't survive it and went into Chapter 11 with their Mountain Pass mine in California. But Linus did make it with the help of their Japanese partners, and are right now hitting on all cylinders.
Yeah. Well, and to read that the Linus's project next, expanding production from 16,000 tons per year to 25. That, talking about total rare earth oxide, I believe there. It's interesting. I believe 140 total 1,000 tons per year, I think, is the total number that I saw elsewhere in the report. So noteworthy that this company is responsible for 10% of mine production for total rare earth oxides. There, ballpark numbers. Speaks to industry concentration and all this, which is very heightened in this politically sensitive and economically sensitive, militarily sensitive. It's a real nerve center, I think, for the global economy here.
Yeah, no, it's important. Like, one could say, China represents 80 to 85% of the world's rare earth production, but Linus probably represents that percentage of the non-Chinese production. So they're really the big Chinese producer. And the report notes that any of the hard rock producers are going to take at least 5 years and likely more to come onto production. So Linus has got a bit of a head start. Now,
Well,
I was going to say a Medallion, we've got a different approach doing byproduct mineral processing. So really, we don't have those same long-term ramp up lead times that the hard rock guys have.
and that's a phrase that's going to need to make its way through the community here as people come to this story maybe for the first time, and others who've been around it before. What did you say? Byproduct mineral processing, was that it?
Correct. Yeah. So we buy somebody else's waste mineral that's at a high grade already, and then process it ourselves and extract the rare earths, sell it to somebody else, and that way quickly and cost effectively get into near term production for rare earths. So
Wonderful.
bit of
And so different, such a different proposition from trying to develop a hard rock mine where you're moving millions of tons of earth per year. This is a very different situation where you may be dealing with radioactive material, of course, and all kinds of other technical challenges that come along with it. But, you know, the way forward to a large degree, recycling, important thing to consider in the mining industry.
Right, absolutely. Well, and people are, the Europeans have a term for it. They call it the circular economy, where as much
Yeah.
gets processed and reused as possible through the life of the elements in our economy. And similarly, we're buying somebody else's, the heavy mineral sands. We're buying monazite, which is the mineral we process from them, but they're mining the beaches for the titanium and the zircon. They end up with monazite. We buy the monazite from them, extract the rare earths, sell that, extract the phosphate, we can sell that, and we end up with some waste material, and we're looking, some of it which is radioactive, we're looking for some solutions for that in the medical area. So yeah, it's about using as much material as you possibly can, and whatever you're processing.
Wonderful. And to jump around a bit, Malaysia, it may not be a place that most people think of if they're not familiar with the rare earth industry, but very important as the location for the Linus plant. I believe there's other Chinese sources who have processing done in Malaysia.
No, I don't know that there's any other rare earth processing going on in Malaysia besides the Linus plant at the moment.
Okay.
Yeah, there is a little bit of processing in Southeast Asia, but nothing as significant as Linus at the moment. Of course, as
Well,
you pointed out, the bulk of the world's rare earths are mined and processed within China.
and for Linus to be an Australian company, their mine production is it coming from within Malaysia and then being processed in Malaysia?
No, actually, sorry, their mine is in Western Australia.
That's right.
So they mine in Australia. They do their upgrading or beneficiation in Australia, and they ship a concentrated ore to Malaysia, where they do the hydrometallurgical work, the extraction of the rare earths, and then they separate the rare earths into the individual rare earth oxides,
Yep.
which are what they market: the cerium oxide, lanthanum, and NdPr.
Scary
Oxides.
to read. Scary to read in this report that a long-term tailing solution for the waste still needs to be approved for Linus in Malaysia, and political back and forth that's happening there seem to cast a shadow or some concern.
Yeah, I guess whenever there was when the plant was originally being in development in, say, 2010 through 2012, there was opposition from political opposition in Malaysia to try to shut down the plant, but it went forward, and it was successful in its startup phase, and then they do need to deal with some of their tailings. As mines do and others do as well, and they've got solutions in mind. But it's clear through that they've been operating the plant very safely under all under all of the agreed upon regulations in the environment. So, as
Yeah,
by all accounts, it's been a good steward, if you will.
great. Well, and looking at this discussion in this UBS report, talking about long-term earnings margins of 40%, it's an impressive number that would seem to suggest that any mining company that's able to capture, those kinds of margins would be very keen to be a good steward, not lose the right of access.
Yeah, they're well positioned. I think anybody, just because of the complexities of the industry, of the processing, and waste disposal and environmental side of it, if you're in this industry and you're processing successfully, there's some moats around you for others to get into the industry. It's only a $5 billion a year commodity, but it's a lot more complex than really anything else that I'm aware of in the mining industry. So, and processing side of things. So, typically good margins accrue to companies like that. So they're in good shape. And of course, what's sort of driving the interest in Lynas being the NdPr, the magnet metals, and the projected growth for vehicle electrification based on that.
Well, and I wonder about market pricing in such a small but important industrial mineral, really.
Yes, well, we saw the in the rare earth bubble that I referred to in the earlier part of this decade, the
Yeah.
prices of many rare earths went up tenfold, and which is really almost unheard of for commodities to go up by tenfold in price. But part of it is the inelasticity of the demand. So when there's new demands on rare earths, because they're it takes a long time to set up the processing for them, and there's reasonably small markets, and those rare earths have unique chemical and physical properties. There's not much else you can do. There's substitution is difficult and all of those things.
Yeah.
So it tends to affect pricing dramatically. I mean, there's it's a 1 kilogram of NdPr that needs to go into the traction motor that drives an electric vehicle. 1 kilogram, that's it. That costs the oxides for that 1 kilogram are worth about $50. That's it. But if you can't ship your car because you can't make the magnets to fit in the engines, then you got a much bigger problem than $50. So if
Yep.
the price goes to $1, well, or excuse me, to $100 instead of $50, does it really matter? No, you just need it because it's essential to make the vehicle work. So that's why these, they call these critical elements or rare metals or energy metals. They've all got, depending on which terms people like to use, but they really are critical for making many things in modern life work, including those powerful magnets that drive all the little electric motors that go inside cars and the big electric motors that go inside cars, and increasingly trucks and trains and buses and e-bikes and even skateboards. So all that stuff.
It's funny to look at the projections from the UBS analysts in terms of what projects could conceivably come online. It seems like scraping the bottom of the barrel to some degree. As you mentioned, the 300 or so junior mining rare earth focused companies that existed at a time, and now the handful that are left.
Yeah, the UBS report shows those companies and identifies 10 or 15 projects, but every one of them really requires, in the neighborhood of 3 or 4 or $500 million of capital to move forward. Um,
Yeah.
Once you've got a full feasibility study and guaranteed offtake partners, it usually takes you about a year to get that much money even assigned to a project, and none of those companies have that. So they're a long ways away from production. That's why one reason why UBS is keen to come out and recommend Lynas.
Yeah.
The other chart you should probably show, Peter, is the one on the projected demand side of things for the for the PR, which are really the key metals.
A bright future, growing demand from magnets and electric vehicles and windmills. Yep. And I always wonder, what other uses will appear. It's a lot of uncertainty regarding the future of this stuff.
Yeah, no, there is. I mean, the top two lines, the blue one, the electronics appliances and others, and the wind turbines, you can see those are, somewhat growing, but they're really kind of flat and consistent markets. The ICE vehicles, their internal combustion engine vehicles, actually consume a lot of the demand currently, and that a
Yeah.
lot of that is really just all the tiny little electric motors that have been increasingly come inside vehicles now. So, um, you know, what is every car, virtually a decent car, has got electric seats in it, electric windows.
Yep.
There's been a trend to move the air conditioning and the water pump and all these other things driven off of belts from the engine to become electric. And if you make it electric, then you want a light electric motor and powerful one, and that's why you need these magnets to drive that. Then of course the bottom in the green section there is the projection from the pure EV or hybrid EV marketplace, and that's really what's expected to drive the demand, through the next 20 years, say. So, but even if now we're virtually at 2019 right now, and you can see EVs have a somewhat of a market share there, and it's certainly been increasing. But the
Yep.
next 5-6 years, there's going to be a dramatic increase, and we're already hearing that through the value chain. So, Rare Earth Salts, who we're working with, they're a Nebraska-based rare earth separation company. They're dealing with all of the consumers of the magnet side of it, and we're hearing a lot of interest from the value chain to secure rare earth oxides to produce these magnets for the electric and hybrid vehicles.
Oh, and looking at that chart, I see 2019, maybe 30,000 kilograms per annum, I believe.
Tons per annum.
Total. Okay, is that tons? Yeah.
That's
And so, and then projected to double up to 75 there by maybe 2025. Looking at those numbers on the demand side, and then coming back to the supply numbers from the UBS report as well, talking about 130 kilotons per year globally for rare earth oxide production, and 75, a maximum that they could identify globally, that's could come online potentially in the next 10 years or whatever it might be, of only 75 KTPA, right? So it's
Yeah. No, and you're right. The Chinese have done a number of things to ensure that they control their rare earth resources, and part of that is they've limited the amount of mining of them, capped the amount of mining, capped the amount of separation production, and they've invested a lot in building the downstream side of it. So the rare earth separation, rare earth metals, alloys, and other value add products, including magnets, that they can really control large pieces of that value chain globally. And so what they've been doing, the Chinese government is quite overt about their desire to see global manufacturers move to China, and in part, they've been holding out the carrot of, you can get access to these resources and these materials, otherwise it'll be difficult to get. So please bring your plant to China, and by the way, bring your IP with you. So, those, and of course, the big industrial companies and automakers are alive to this, so they're desperate to make sure that they've got alternative plans for seeking these supplies outside of China, and that's where our approach actually brings quite positive for that.
certainly. And it occurs to me what you're saying, that it contributes to this market being somewhat obscure or opaque to people who aren't really experts and insiders in it. How reliable or whatever numbers we might see regarding cost curves of mine production or processing, in China. There's some uncertainty around that, and that must, I think, contribute to increased hesitancy for some to even get involved in the space. And then I would think a bullishness on others who are ready to see what exactly can be done. Linus, carving a way
Yeah.
forward. Um,
A lot of people would rely on, especially the bigger investors, of course, would rely on the likes of the UBS to at least alert them to the opportunity, do all the basic research, so they're then in a position to evaluate it. There's been more increasing interest in it. Some of the guys I talked to in London and New York say that they get a lot of questions about lithium and cobalt the last 18 months, but they're getting more and more about rare earths as it relates to the energy metals than they had gotten previously. So they realize there's some interest in it, um, but everybody also recognized that there's some complexities in this marketplace.
yeah,
But with complexity also comes opportunity if people are smart about how they play it. So
yeah.
there's that element to it as well. So we'll
Well, and
probably at some point in time see another mania in this marketplace. When it's going to come, I have no idea. Can't predict those kind of things, but it certainly smells. At least there's increasing interest. So as I mentioned when we first started to talk, it feels like the bear market's finally over, which is great news and good for investors to start looking at these kind of things as well.
and your involvement with Rare Earth Salts, again, who has actual production in a private company, at least for the sub part of the production chain that they're focused on. Um, that is so important, I think, in contrast to what in public markets ends up to sometimes just a lot of hot air and time and spent and not a lot of progress with actual production.
Yeah, yeah. So rare earth salts is a really they've developed a technology for rare earth separation. So rare earths are chemically very similar to each other, so that separating them is actually time consuming, expensive, and difficult. And solvent extraction is kind of being the industry standard for doing that. Rare earth salts has developed a proprietary technology to do that, and they've implemented that in a plant now that's based in Nebraska. Processes or shortly will process about 400 tons a year of material. In a global market of 140,000 tons, it's not huge, but they've got plans to scale it up to 3,500 tons. So they're in good position. As you mentioned, a private company there. I was just talking to their CEO today, and they're very very bullish about the customer demands for separated oxides, and that's what it all starts. And so together, between buying our byproduct mineral in North America, processing it here in North America, shipping concentrate to rare earth salts, and them selling marketable oxides, we can actually build a complete rare earth value chain here in North America
Which is,
within a few short years.
yeah, and that's one of the lauded goals that many people have sought after for quite some time now, right? And again, to have a private company that's actually having some traction experience doing this gives some greater sense of what kind of numbers and the economic numbers that may be associated with this, and for you as well as Medallion public company. I would, making economic forward-looking statements, you have to be very careful with providing guidance on costs and projected revenue numbers from this plan. And I think that creates a tension for a lot of people who are like, well, what are we? It's hard to look around that corner, right? And you really have to believe the team's ability to achieve something that basically hasn't been done before.
Yeah, on this, if you're referring to the rare earth salts and their separation process, it certainly hasn't been done
Well,
at
and in combination with you too, with what you guys are doing, sourcing monazite waste and the whole value chain there put together is pretty unique.
Yeah, it's pretty unique. Certainly, like there was a French chemical company called Rhone Poulenc, then became Rhodia, and now it's owned by Solvay, a Belgian company. But they've been processing monazite in France, or were processing in monazite France for quite a few years, that they were sourcing from Australia and Africa, and extracting rare earths and separating into oxides that they then marketed. Now, for many years, they shut that plant down in the 1990s and moved their operations to China, as did others. But we're even though we've upgraded the technology for the processing and are doing better things with the waste streams, um, the the basic business case of buying and processing byproduct monazites, uh, not new. It's just sort of being reinvented here in North America. So that's kind of
Wonderful.
exciting.
Yeah,
Yeah.
certainly. Thanks. And to that, one of the important numbers that gets talked about, capital intensity ratios, things like this. And I wondered for Linus as a hard rock mine source of production versus mineral waste processing here, if how we can even compare capital intensity numbers. And we're not there yet, I don't believe, in terms of knowing what numbers Medallion can put on the board, but I look forward to the time when we are. And I wonder if Medallion will rank as an outlier in capex or in opex, or if it'll be kind of middling. Yeah.
Yeah, I mean, I think there's a couple of things. One is it's difficult to predict exactly what, I think Linus increase in capacity, certainly as an existing miner and processor, is a lot cheaper than starting fresh.
Yeah.
That said, we're going to be much lower than their original capex prices and much lower than any other hard rock miners capex, just because of the nature of our footprint is so much smaller than theirs. We're processing an ore that's coming in at a grade of about 60% rare earths. So, I mean, any miner will, they kind of boggles their mind if they can start with a 60% grade.
Yeah.
So that's a huge benefit to this approach. So certainly on a capex basis, I think we'll always be very competitive. On an opex basis, it's the biggest costs are going to be the reagents. Disposal is going to be, something that's going to be worked through. So it's, transportation's of course always an issue. So those things need to be kind of sorted out, but I don't see any reason we won't be very competitive and on the OPEX basis. If somebody's got a mine that outside of their big investment in order to get, if you will, a free ore is all the exploration costs and potentially royalties and the dilution that goes along with all of that getting to a spot. But remembering a rare earth mine hard rock mine would typically have a 3 or 4% rare earth grade. I'm starting with 60%, even though I have to pay for the material. I'd rather take that approach. So,
Well, I wonder if we won't see a flurry of activity around this business model in the next cycle, noting that China, Northern Rare Earth, high tech, apparently produces more than half, 74,000 tons per annum rare earth oxide.
yeah,
So
that's
it's
the
it becomes an interesting question around, it's one thing for Chinese firms and the country to invite people to come produce in China. It's another thing if China goes in acquisition mode really around the world. There's been all this talk of the need for security of supply. I wonder if that security of supply was to be assembled by some small fledgling companies in the U.S. or Europe, and then for a takeover attempt to be made of those companies, it's the stuff of adventure spy novels or something more than the stock market, you would think.
Well, to your point, Peter, many of the projects that are being in development outside of China have Chinese investment in them. So that would be
Certainly.
Northern Peak, the old Mountain Pass mine in California is partly owned by Chinese interest. So they're Greenland Minerals. They've all got many of them have got significant Chinese involvement. So the Chinese have a rare earth footprint that extends well beyond their borders. And I'm not saying there's anything nefarious about it. It's just the way the business works. And Chinese go abroad for all sorts of resources.
Yeah,
So,
certainly.
But it also tells me that they don't have unlimited supplies in China, or they wouldn't be reaching beyond their borders so actively as well. So I think it bodes well
Well,
for what we're doing.
and you start throwing around the term national security, right? And then it's all the rules can become uncertain, even in the US, in Canada, anywhere. I wonder what the future of US attitudes towards the Chinese, as a source of supply for this stuff. There's been that kind of saber rattling. The John McCain namesake NDAA this year, large piece of legislature. Had to read through it myself a couple times and noted the little bits on NDPR and other critical metals. Great to see the disclaimer that we have this intention to not source from Chinese sources of supply, but if prices are too costly or the quality is not there, then please go back to the Chinese sources of supply.
Yeah, I mean, I think the signal it sends is just as important as the message itself. And the government's trying to encourage development of these value chains, and this is one of the ways they can go about doing it. So, from our perspective, we welcome it because it helps us, not hurts us. And in the industrial companies as well as the military now are all looking for alternative supplies. So it probably doesn't force them to make big changes right away, and that'd be really difficult, and you wouldn't want that burden. But nonetheless, people are getting more alive to it and making changes. So,
yep. And another stunning chart that jumped out at me from the UBS report was just the lowest quartile producer for a few different commodities. Thinking like aluminum and copper. Where does that lowest quartile producer on the global cost curve? What do his margins look like? And to see NDPR kind of right smack in the middle there between copper at 60% margins and aluminum down in the 20s. I was surprised, to see how great some of the margins were for copper and stuff like that. Those mining companies are making a lot of money at that point, right? And the position of Lynas, it's a healthy middle of the pack place to start, right? It doesn't look overvalued or anything like this point. It looks like some healthy fundamentals.
Yeah, no, I think they're very well positioned, and I think they're in terrific. They've got, they went through a long battle to get where they're at and be a reliable producer and supplier, and they're now going to reap the rewards for many years. So we're happy to draft in there behind them.
Well, and it looked like in 2017 there was something of an uptick in NDPR prices there. It seems to have kind of come back a bit now, but these long-term price charts, looking at a 10-year chart of NDPR, interesting to see where the UBS long-term price is. Again, kind of smack in the middle of that historical trading range to some degree, cutting off a lot of the bubble hype, but above what has been kind of the price for several years now.
Yeah, NDPR is the one material that really held up the best after the rare earth prices went down post 2012, and there was a bit of a spike last year. In fact, it was when the Germans were over in China searching for lithium and cobalt supplies. Actually, people obviously got bugged they'd be looking for rare earths next and drove up the price. So never any shortage of speculation in China. But we see, like sort of a long-term price between $15 and $100, and it'd be $60 today maybe, is well supportable, and none of the major buyers are going to have concerns with pricing around those areas. So, it's more about getting to production, expanding supplies, and meeting customer needs, and there'll be lots of juice in the orange.
Well, and that's the tricky details of industrial minerals, right? You have to make sure your product specs are correct, and quality control is everything. These are not, your basic commodities that are interchangeable from one unit to the next. There's a lot of real subtlety that goes into finished product here.
Absolutely. Yeah. All right. Well, that's been great. Appreciate the catch up with you, Peter.
Pleasure, Don. Always. And maybe I'd ask anything else regarding news flow from the company.
The most important thing we've done in the last few months, we've completed our our test work at the Saskatchewan Research Council, and sent down a concentrate sample to rare earth salts. This is a total rare earth concentrate, so all the rare earths together to rare earth salts. It'd be like a pure chemical sample, and they're taking that sample and putting it through its paces right now to separate it into the individual oxides. And
Yeah.
we expect them to report back to us shortly, and we'll of course release that to the marketplace certainly within a couple of weeks.
Wonderful. Mr. Don Lay, Medallion Resources, MDL, and the TSX Venture. Thank you. Goodbye.
Bye for now.